in New Jersey. I'm Mike DeStasio, the current president of PIA New Jersey and vice president at Assured Partners of New Jersey. Before we begin, I'll have the three panelists go around and quickly introduce themselves. Aaron, want to introduce yourself?
I think I can handle that. Good morning, everybody. Thank you, Mike. I appreciate it. My name is Aaron Levine, LG Insurance Agency, out of the beautiful Jersey Shore. It's still local summers down here right now. I'm also a committee member with the Communications Committee and the Business Issues Committee and director for PA New Jersey. And I'm kind of stoked to talk about what we're going to talk about today. So thanks, Mike.
Keith?
Mike, yeah, for those listening, I'm Keith Savino. Those who don't already know me, I'm a former president of PIA New Jersey, also a past president of PIA National in the past few years. I'm a managing partner and principal at PCF Insurance Services. We have local brands in the area that I oversee, such as Broadfield Insurance, Warwick Resource, Sanford Insurance, and a number of others.
Do you mind if I go next, Mike? I'm Brad Latchett. I am the Director of Government Industry Affairs for PI Northeast, which includes PI New Jersey and its footprint. Apparently, I'm also the only one who couldn't figure out the background thing here. So I apologize for that. Which one of these doesn't belong? I literally moved around furniture in my office, was putting walls in places, and I brought a green screen in, even it didn't work. So I tried for you people, I swear, I really did. But in addition to being a part-time mover, I also lead the legislative and regulatory initiatives at PIA New Jersey and the legal team as well. So.
Thank you all for joining us today. Before we get started, I want to note that this event comes under the antitrust statement, applies to this event, and no specific carriers will be discussed. Everyone will also be muted for the duration of the event, but you're able to send questions through the chat to the moderator. Claire will be listed as moderator. We can start with a question submitted by one of today's attendees. What percentage of your commercial clients have standalone D&O, cyber, and EPL coverage? Aaron.
That's a trick question, and I know we're being recorded right now, so I hope this video doesn't come up in a legal matter sometime in the near future. But certainly not a high enough percentage of my clients have these coverages. I feel as if I'm pretty passionate about it. We do a great job of presenting these opportunities, but we hit quite a few roadblocks when we get up against it. COVID has been pretty helpful to getting more insureds to want to sign on to these policies, but then there's other roadblocks, on the carrier side, often when it comes to putting new policies in place that, where coverage hasn't been in place before. So, we've been working hard to get more and more of our clients informed, educated, and up to speed with getting these coverages in place, because when it comes down to it, you're more likely to have a breach or an EPL claim than a fire, right? And I know that's something we're going to cover a little bit later, but I think we need to get more of our insureds on these coverages on either a standalone basis or in some type of package policy, whatever can be created. And hopefully we'll talk a little bit further about some tips and tricks on how to get that done today.
Keith?
Yeah, Mike, the executive lines are by nature best served by standalone forms. There are some impactful differences between a BOPS, occurrence forms, and some of the endorsements that might be thrown in underneath that versus the claims made forms and retroactive dates. While an endorsement is certainly a decent start, you don't want to also not have that if available. You want to be able to take it to the next level and not just rely upon something that might be bundled as part of the package. So getting as much as early is really important. That retroactive date is super important. So every year that you put it off for your client is another year of look back that your clients will lose.
I would say, Aaron, you had a key point, and you mentioned education. And full disclosure, as an attorney, I've never sold an insurance policy in my life, but I talk to a lot of PIA members. And we talk about coverages all the time, and they'll say, "Oh yeah, I had a client who had this claim. It should be covered under their BOP." And let's say it's an EPLI thing or a cyber. I'm like, no, it's not covered under there. You need a standalone policy for that. When you talk about package policies or BOPs and things like that, you might have a baseline of coverage for a lot of different things, but you're not going to have a deep amount of coverage for one particular thing. EPLI, for example, I just saw a stat not too long ago that I think it was about 70% of businesses do not have an EPLI policy. Of that number, 60% of them think they already have coverage under a different policy. Right? That's an education issue right there. Educating your client saying, oh yeah, that discrimination claim is not going to come to your BOP. It's going to come under a policy you don't have right now, and that's why you need to buy it. And for an E&O purposes, for producers, it's hugely important to educate your clients on this so they know, and they can make the decision of, no, I don't want that, or yes, I do. All you can do is inform, and then ultimately they need to make the best decision for themselves.
In general, what additional or separate coverages should policyholders get in addition to the BOP?
So, I mean, it's, and if we're writing a BOP, depending on the class of business, right? Any service provider, whether they be in insurance, accounting, legal, even construction. I have an issue going on in my house right now where a contractor messed something up pretty good, right? I'm like, damn it, do they have a professional liability policy, right? Probably not, right? So hopefully they're going to come and fix their mistake and life is going to be good. But then what do I do if they don't? I can't go back to their insurance policy if they don't have a professional policy, in place. I'm not going to get anything out of it because I don't see any other coverage in there. So professional liability for any type of service provider, super important. Management liability, the EPLI, employment practices liability, and making sure it's an appropriate form, right? We want to have discrimination. We want to have some wage and hour coverage in there. So we want to make sure it's a reasonably good policy with a good limit, maybe with defense outside the limit would be even better. And then the retention is important. We're seeing the retention on some of these policies, especially in the hospitality class, go through the roof. I mean, I'm selling 25K, deductibles, and, I'm kind of giving a take it or leave it, because if you had retroactive coverage to, 3 years ago, we still have $5,000 retentions and deductibles on some of these things. But anything new is we're seeing these super high deductibles. And then of course, cyber, right? And anybody that holds data or employee information, has some form of need for a cyber policy, for whether it be ransomware, the data breach, personal identifiable information, whatever, what have you. There's so many of these important things that we need to continue to talk about, and then also find ways to simplify it and present it. And we all have claims experience, with all these policies. So it shouldn't be hard to put the fear factor in play when it comes down to it.
How do you convince these customers to purchase a separate policy, a standalone policy, especially if they think they have coverage extensions under a BOP?
I spend the time, right? I think Connie says it best, right? Start reading the quote in the policy from the exclusions and go forwards. Start at the back and go forwards. Chris Gonzalez, likes to break things down into a daily cost of insurance for different types of policies. But we can show the claims data of how much these policies are costing insureds that didn't have policies, or that did have policies and then are getting their claims covered on the cyber side, on the EPL side, or any of these other professional liability items. So we have the data. It's just taking the time to work with the client, right? What kind of client is it? Are they going to be more analytical? How do they want to be interacted with? I think is super important, is knowing who we're working with and how they're best communicated with it. The guy that I was talking to this morning from Staten Island, I know exactly how to talk to him. You start talking about, cement shoes and everything gets a little bit more clear. So I think it's just taking the time that we need to explain and pull the important pieces out of the exclusions and out of the coverage where, we think there might be an issue, in the near future.
Can I inject? I'm going to put it the suggestion of using math to convince these people. to buy this coverage. So if you look at, let's say, what an average premium might be if you buy a standalone, it's a couple $1,000s. Anybody know what the average billable hours of an attorney in New Jersey is? It's about $275 an hour. So let's say you have $1,000 premium increase on a standalone. That's about 4 hours of legal bills. I can guarantee you'll have more than 4 hours of legal bills if you have a case on one of these. So I don't know, that's what I would use. It definitely is a kind of a penny wise, pound foolish sort of situation that you got to sell them on the long-term value. If a claim's going to come up, and it's going to come up eventually for any business, even the most careful one, right? There's just so many things to think about. These policies are just a necessity.
Yeah, I'm going to add a few things into this. First, I'll speak a little bit about the agent's perspective, because we can speak about what you're supposed to say to a client, but I want to do sort of a reset on the conversations that I've had with agents for many, many years about this. The first is a lot of agents think this is a relatively new exposure and an immature side of the business. This grew out of the dot-com boom in the late 90s. I insured technology risks back in the late 90s, and I have to tell you, some of the forms we had back then were a little rough, and they were immature. But turning into the early part of the 2000s, I was writing cyber, and I can remember some of the first policies that we wrote. You know, some of the rating basis for premium were on things like number of email addresses. And by the way, some of those email addresses were, you know, like Prodigy and CompuServe and AOL. I remember at the time. So this is not a new exposure. That's the first thing that you need to realize. Your clients have had this exposure for 20 to 25 years minimum. Back years ago, we used to refer to it as EDP coverage in the 90s, and it was thought more from a standpoint of restoring backups after a fire, et cetera, right? If you want to tie this into, you know, the internet, well, hello, you're going back to times when, you know, Bill Gates wrote a book called The Road Ahead in 95, and 9 months later had to re-release it because so much had changed that year. So when you want to think in terms of what you need to do for your clients, saying that it's a new exposure or I can't get my arms around this becomes less and less of an excuse not to offer it to your clients. So that's for the agents. The fear of believing that there's so many different forms. So I've heard this objection from agents. There's so many different forms. I'm waiting until the forms become more standardized. Okay. So let's talk about executive lines for a moment. So I believe most people think of commercial lines as one big bucket. It's really not. There's the P&C side of the commercial lines area, and there's the executive lines side of the commercial lines area. Executive lines has frequently handled lines of business like D&O. And because of the nature of executive lines, most of the cyber policies that first came into the US came from companies that were also offering executive lines coverage. So if you think of two verticals inside the traditional carriers in the US, those two verticals were property and casualty and executive lines. It's the reason, for example, why you could do commercial download with your commercial package, your workers' comp, your umbrella, and your business auto. Try it with cyber. Try it with D&O. Try it with other lines of business that fall into that. So as a result, no, those forms and endorsements have been around for a while. They continue to evolve in that space, as opposed to the ISO forms and other standard forms that have existed in the property side of the industry and the casualty side of the industry. So if you're waiting for the day that all the policy forms will be aligned as some magical moment for you to start offering this coverage, you're going to be waiting for a really long time. Now, there are plenty of resources out there that will compare these forms for you. And they have been doing that in the D&O space and other spaces for many years. So if you do want to become educated on it, guess what? You're on the right type of a call, because the trade associations like PIA of the Northeast, right? New York, New Jersey, Connecticut, Vermont, New Hampshire, offer those types of courses, and you should sign up for those and become more expert on it. Now, how does this impact your client? If I have to reintroduce this concept to my client and try not to have their eyes glaze over, let's not talk about this as a computer coverage. Let's speak about it as a data conversation. Here's the question to ask them. In the next 10 years, do you think that you are more likely to have a fire or a data breach? And I think after the past few years of folks' experience and what happens on the news every night, I would venture to guess that 80% or more of your clients are going to answer the question, data breach. That's when you can bring up the conversation. Now, I'll add to the math conversation that Brad mentioned. A traditional managed services company who might be doing something out of their norm might charge you $150 an hour to do things. However, those who have been through a cyber claim recognize that the restoration companies or those who come in, you could be talking $300 to $600 an hour. So let's add that math to the conversation and explain that to your client around the $2,000, $5,000, $8,000, $10,000 cyber program, depending upon where they're at. We'll talk more in terms of what that market availability and capacity is later, but that should help to create at least a level set for the conversation. I know as an agent, it's very difficult to take a client who has been buying traditional property and casualty insurance, that commercial package, property, liability, perhaps the umbrella, in some cases, maybe not even that, the business auto, perhaps in some cases, you still have to convince somebody to hire an non-owned when they don't have a commercial auto in their name, and the workers' comp and the disability. So introducing lines of business like cyber, which by the way, might cost as much as their whole package does on the other side, can be a challenge, no question about it, but it has to be introduced into the conversation.
Thank you. That brings us to the issue of cyber liability, which has changed substantially over the last couple of decades, and even in the last 12 months. Before getting into the coverage for breaches, what are businesses' actual obligation to protect data?
How much time do we have on this one? Geez, I think we could probably do about 3 hours on just what the obligations are. And if you have an hour free this afternoon, shameless plug here, I am teaching a course on data privacy laws and the commercial clients at 1 o'clock. So if anybody's interested in that. So we have seen there's been a general evolution of data privacy laws over the course of the past 30 or 40 years. When we think of data privacy, we generally think of things like Graham-Leach-Bliley and HIPAA, right? Those are the kind of two big ones, protecting health information and financial information. And that's generally been what data privacy has been. It's been sector-specific laws or regulations with financial services, with health, with student records, things like that. We're seeing that migrate now, though. For example, New York just passed, or went into effect last year, the SHIELD Act, New York SHIELD Act. And it is not sector specific, excuse me, it's data specific. It's going to a point, a word that Keith had used a little bit earlier here, data. If any business holds a certain amount of data, names, social security numbers, addresses, credit cards, anything like that, they fall under these new laws, regardless of whether they're a hospital or a bank or a mechanic or a warehouse or whatever it might be. So it's data. The other big thing that has been the change in these laws is they're extraterritorial, meaning, let's say, so I mentioned the New York SHIELD Act. Well, you're in New Jersey, you don't have to worry about it. If you have New York clients, then you have to worry about it. Because it applies if you have New York resident information. Doesn't matter if you live in New York or in Alaska or Hawaii, it still applies to you. Similar laws have been put into place in California and Connecticut. New Jersey is considering one now as well. So this is the way things are going to be going. And these laws require multiple things for these businesses that the law now applies to. They require all these businesses to put in certain safeguards. Administrative, which are kind of policy safeguards, literal physical safeguards, and software safeguards. It goes into more depth than that. In addition, there's notification requirements too. Some laws have different size exemptions and things like that. So there is some nuance to it. But generally speaking, these laws will apply to any business that holds any sort of data. So basically, every business now needs to be aware of data protection laws in their states.
These changes have naturally extended to the potential liability for businesses if they suffer a data breach. Keith, how's the market outlook for cyber liability policies at the moment? I know prices keep going up as well as retentions. How can agents sell cyber insurance policies better?
So Mike, it's interesting that right now at a time when we should probably be having some of the greatest success of placing cyber programs because of really public losses and claims that have occurred in the past few years. The marketplace, of course, is also becoming impacted by those losses and claims. On what Brad mentioned before related to some of the drivers behind the purchasing, before I talk about the marketplace, I want to add a couple of nice tidbits of information to that. So I think for years, we've always been looking forward to compliance becoming one of the drivers. And at one time, the compliance was really very industry specific. For example, we have compliance requirements from the New York cyber regulation, right? So specific to the insurance industry and specific to a state. And then because we have 50 states, it would often get a little muddied and difficult for folks to follow. And Brad's been presenting on this topic for many, many years, right? As it relates to the insurance business. But some of the states like New York with the SHIELD Act, they went horizontal with it. And they changed the way in which we view a breach. So it used to be in some states and in some regulations that if you had a breach, you would bring in the forensics experts and they would help to determine whether or not that breach actually reached down to and impacted certain clients. And then there would be obligations upon you, either because of compliance or because of moral and civil obligations, for you to notify those folks. You hear about this all the time. Marriott had a breach years ago related to their Starwood acquisition. And from the time that they found out that that breach occurred to the time that they notified their clients, it was post forensics investigation. And you'll see this all the time where the folks will mention the date that it occurred and whether, so you can determine whether or not you might be one of those impacted by one of those breaches. Well, a lot of that has changed now with some of these regulatory bodies to say that you should not wait until you know who's impacted to make that notification. Now, that's a huge change. That's a change that drives right down to everybody, including the dry cleaner and pizza place on Main Street, USA. And those folks are thinking, well, I don't take credit cards. They don't realize it's more than that. So I'll give you a business use case around it not being a computer situation. Mortgage broker jumps in his car, has 3 or 4 file folders in the back seat of his car filled with people's information on applications. Drives to dinner with his wife, forgets that it's in the back of the car, parks at a valet, goes home that night, enjoys driving to Little League games over the weekend. Monday gets in his car, drives to work, and the file folders aren't there. Or it looks like they were ruffled. Was it one of the kids that was in the back seat that moved the file folders? Did somebody throw it in their bat bag? Did it disappear at the valet? Do we know? Did he have a breach? Yes. Mm-hmm. There was not a single laptop, computer, or other thing that might fall under the definition of an endpoint or endpoint protection in order to have that claim. So it's more than just computers. Now, unfortunately for us, the applications are really focused on technology. So our world, to go to the marketplace question, went from having 14-page applications with incredible details on them that scared most folks who completed them. Many agents and brokers were incapable of actually translating what folks were looking for in those applications because they didn't possess, ISO 9001 certification in order to answer the questions. To, hey, let's drill this down to 5 questions to make this easier for folks, right? And now, based upon limited information, you're now seeing many carriers who went to asking those 5 questions suffering pretty substantial losses. By the way, it's not just those, it's everyone. And in particular areas. Some of those areas include ransomware, for example, where it used to be somebody would get the blue screen of death, be asked for $1,400 worth of, some cryptocurrency, and they would move on, and they would get a friendly person who would sell them the decryption key, right? Those are the good criminals. And so they would sell you the decryption key. They would even provide you support if it didn't work, and that ransomware would help you out. Well, now we're seeing ransomware numbers in the 7 figures. That is money that will literally put most of your clients out of business. There's no 2 ways about that. And so they will decide to literally just shut their doors if they need to, rather than face all of the downstream impact on it. So this is basically an uninsured fire. And that's a challenge for folks. Well, now the carriers, after suffering many of these breaches, some that are quite famous related to the lack of multi-factor authentication, are now adding supplements and additional questions that will come up, even if they weren't on the original applications that you put in. They will also give you additional questions via email. So you'll find on submissions that used to be 5 questions, now you're getting a supplement back where you might have a single-page document asking 5 questions just on multi-factor authentication and 2-factor authentication. I'll bet you if I asked 100 insurance agents to give me a definition of multi-factor authentication, 10 might get it right. So if you can't explain it to your client, how do you expect your client to understand it? This is also showing up during the renewal process. So I saw a pop-up just a moment ago where somebody said, can you give me an estimate of what this generally costs for a small business? You know, we started off with an antitrust statement initially, so I have to be super careful about this, okay? So, you know, provided that, that our antitrust people don't get upset about this, you know, depending upon the nature of an account, if you're talking about an SME exposure, small business exposure, and they're under $2 million in sales, prior to the pandemic, you know, finding someone coverage, you know, could have been as low as $400 or $500 for a low limit with certain sublimits that were there. That number may have just gone up to $2,000 to $3,000 in the past year or so.
Wow.
So it really just depends. The other issue that we're facing is that there are well-known carriers who've decided not to be in the space anymore. So we all know what it happened. Hey, we have this experience from New Jersey Auto many years ago. It doesn't change. When you lose capacity and you lose markets, it's impacted by rate. The reinsurers have some opinions about this as well. We managed the program. I managed the program. We had the carrier go from writing primary limits to 5 million to now stating that they will not write any primary limits. They will only write excess, and they will only write excess over 5. So that's changed in the past 6 months as well. So I will tell you that if you quoted somebody 5 months ago and that person calls you up and says they want to go after that now, do not assume that quote will be the same. And also do not expect that the terms and conditions of that quote will be the same or indication, right? These are indications, they're not quotes. So the indications are going to be based upon subjectivities. When you get those subjectivities back, be really clear with your client about those. So you might have started on one company's application and you have an indication from another company. Please look closely at the subjectivities. It might include their application being completed and signed. That didn't seem to make anybody nervous a few years ago. Now it makes people nervous because the application you used may not have asked all those questions about multi-factor authentication or whether they were part of certain breaches recently, or if they had certain equipment still running in their offices, whether they encrypted their hard drives, et cetera, et cetera. But that new application might. And guess what? That quote may not be bindable. So there's a lot of that's changed in the marketplace. And that is a really super big deal right now. And so someone just noted as well that the market changes in the pandemic are making it harder to sell cyber to customers. Well, the work at home exposure is also big. So recently, one of the federal agencies had posted that the amount of breaches have increased on weekends and holidays. Now, why do you think that is? Because people are accessing this information from home frequently. And a lot of companies sent people home with computers and plugged them into their less protected environments than they were in the office. So there's a lot of issues at stake. For any agency that's on this call right now, I would tell you take a deep dive into your own infrastructure. I don't care how big you are. You could be 3 people in your office and turn on multi-factor authentication. And you need to get that rolling for just about every system that you use, including your management system.
Keith,
I hope that gives you what you needed, Mike.
Keith, you brought up a great point on a lot of great points. I shouldn't just say one, right? The one I was thinking about was access when you're talking about data liability or data privacy laws. The definition has changed. It used to be, as you said, that it was somebody impacted. But now the laws, the definition has literally changed of what a breach is. It's if somebody got access. It used to be if somebody broke into your house and then was able to get out with something. Now, if somebody's able to get in, that's the triggering mechanism. So that changes the conversation to your point, Keith, because it makes it that much earlier in the process. And you need to be aware of a lot more because there's anybody coming through the door.
And it's expensive. You know, Brad, you may find this shocking being an attorney yourself, but the IT costs are more expensive than legal expenses.
I bet.
And by the way, when a claim begins in cyber, it's not for anyone who hasn't been through one of these. It's a joy. It's not like a traditional claim where you're just reporting it to an adjuster who gets assigned. No, no, no. The first thing that happens is counsel is assigned in most cases. So when the counsel is assigned, the counsel then contacts the third parties. Now, why is this? Because there are multiple portions of a claim that come out of one report, and some of that includes damage control. So the way in which you handle the public response to a loss is as important as the way you handle the technology claim. So I saw one come up that discussed about business interruption or from or related to the costs of claims. I have had claims that where the claim easily reaches the limit, easily and quickly. I've had others where because the client had really good backups in place and they had good infrastructure in place, they were able to quickly mitigate the loss, and bringing on board the third-party IT folks simply reinforced how good the client was actually handling their infrastructure. So that, you know, that this belief that claims come out of just sloppy infrastructure is just absolutely false. You know, there are really good clients that have suffered losses that have fantastic infrastructure you'd all be jealous about. But because they had that infrastructure, they were able to mitigate the loss. And instead of something being a $2 million loss, it was a $500,000 loss. But it's not a $5,000 loss, folks. You know, so that's the thing to keep in mind. I mean, generally these losses, particularly the ones of recent with ransomware, it's not just about, you know, the $500,000 or $4 million to get a decryption key. It's about bringing on board the legal expense. It's about bringing on board the media representatives or to others. And then, by the way, it's also about the equipment cost, an important point of evolving forms. So if you've got 100 PCs sitting in somebody's office and they just had a virus hit them, why in the world would you keep those 100 PCs running, right? So now you've shut down 100 PCs. You don't know if they're infected. You're not going to turn them on in the network. So here comes the third party folks at $300 to $600 an hour. And there might be 3 or 4 of them working on it. Now that we have to test the machines. Do you want to be down for 2 or 3 weeks in a business interruption loss? Probably not. It might take longer to check all those machines. So what do? Well, let me go buy 100 more computers, right? That's the thought. Is it covered? Go look at the form. All right. The nickname for it is bricking, but chances are most of the forms you wrote 5 years ago don't include that coverage. So that's something you need to consider on every renewal. Some of the carriers will throw it in on renewal. Others will want to charge you. But the point is, this is why you stay current on those coverages so that you have that expense. Well, guess what? 100 computers is going to cost you another $500,000 by the time you get done installing them, configuring them, making sure they're covered, setting up the network separately, pulling off the other items. Cloud computing now has caused people to say, wait, I need a copy of that locally. So now folks are investing in local equipment again to make a copy of what they have in the cloud because they can restore faster at the time of a loss versus having to download all the data. You guys understand the evolution of this. So this is a much larger expense than most folks consider. This is not a small number. So the value per dollar from a cyber program, I would argue, might be one of the greatest values that any of your clients can spend money on.
I'm going to basically take the last 9 minutes of this and just share it across my client base and, see if I get a response. I'll
share it with mine too.
I'll send you a VIG, Keith.
Yeah. Thank you. Thank you.
Keith, what are some scenarios you use to grab a client's attention? Can you illustrate a few scenarios that people don't often think about?
I think I just shared some, the business use case around the file folders in the car. And I picked on mortgage brokers, but frankly, it could be our own producers, right? That I know of, most producers don't work with digital acquisition tools. They might run out with some applications in their hand. So for those who believe that this is not a real situation, just look internally first. Look at yourself in the mirror. And that often happens when account executives will generate applications, send somebody out in the field, have them get collector or get updated, rating information or exposure information, et cetera, right? It's not unusual to find folks walking around with a little book filled with passwords, not to mention the Post-it notes that might be around someone's screen. So, everybody spends, millions of dollars on data security only to have full access to the, to the data that the cleaning people have full access to it, So one photograph of your screen and you're done. You're going to have this with your clients. We are closer to the issues. So as immature as you think you may be in the insurance business to this topic, there's a good chance the large percentage of your clients are even less mature on this topic than you are. So think of the things that you did wrong in the past few years, and there's probably a good chance your clients are, and you can speak to how you fix them internally in your organization. To me, that's a really good business use case as well of, hey, we had to do it too. We had to invest in multi-factor authentication. We had to invest in this. Good business use case. Ask your clients, are they running any Windows 7 machines in their office anymore? By the way, I hope none of the agents on this call are. Hello, Microsoft stopped supporting those years ago. I'll walk into clients' offices or talk with them and get a peek, and it's Windows 7. You're like, oh man, that's almost indefensible for your client at this point in time. Just write the check. So, those are business use cases, but typically you're going to find a first party loss where someone finds out internally that they have an issue. They have not been sued by a client yet. This is one of the key differences. And now they have the moral obligation to notify their clients and bring in the restoration companies. No one has sued them yet. So you have to take responsibility in your own business or agency to protect the client data. That's what the states are trying to put on you as a business use case, right? From a third party perspective, your clients now find out that they've been breached. And when they report it, could be as simple to their homeowners carrier. Some homeowners carriers now are offering cyber coverage, which we should talk about in another call once, because that's really important from a personal perspective. But guess what the carrier is going to do? They're going to do research now. There are third parties who come in and say, where do we think your data came from? Imagine you find out it's from you. Guess what? You have a third party loss now, right? And there's a lot of attorneys who would love to take that one. So they're going to come after you for as much as they can. And now you're defending yourself against a third party case as well. So you have both a first and a third party exposure. And that's a really important reason around the standalone coverages versus the non-standalone, which may or may not include all of those coverages, including the business interruption, the bricking, et cetera. So these are complicated losses that you should get familiar with so that you can explain them to your clients. The last tip that I would give you is around, again, getting rid of this being a computer problem. It's not. You did not have to become a volunteer fireman in your town to be able to explain what a fire was to someone. You should not have to become a computer expert to explain what the downside is of a cyber loss, because it's not about computers. It's about information.
What are types of businesses that don't seem to have the proper coverage?
Everyone. I ask the question when clients will say, well, I don't know if we need the coverage. The first question I ask is, all right, so here's one of the qualifying questions. Do you have customers?
Do you do business with anybody else? If the answer is yes, then you need this
else?
coverage. Yeah, absolutely.
Yeah. Now I have had clients who own nothing but vacant land who say, well, does that LLC now need coverage? And I'm like, oh, wow, okay, that one's interesting. They're like, there's nobody on there. There might be some deer that come strolling across it. I have to keep the hunters off the land. But, that does happen. You're going to have that weird exception to it. But even with that, you go, wait a second, you have employees? Oh, yeah. Okay.
I was reading on MSA for a client of ours who's doing business with a large national organization. And this client of mine who's we'll call them a marketing firm. They draw pictures and post them in places. They were required by this large national to carry 10 million in cyber coverage just for being a part of the network system, right? So coming down from the top, they're making every single vendor be sure that they have proper coverage in place across the board, cyber, professional liability, and everything, and then down to the basics that we traditionally put in place. So we're seeing it everywhere, and more in these contracts. There's a large requirement for that cyber coverage.
Yeah, employee training inside of every organization is really huge. We think of this as always being bad guys from the outside. It's often, and we're coming into the holiday season, so we're really careful. It often comes from, what otherwise look like relatively innocent emails where somebody will click on them. And as we've moved a lot of our mail and other services to the cloud, you might get that pop-up that says log into your mail now. So from the fake, emails that came from Walmart and, from, Costco and from every other major retailer that might be delivering. I mean, this is what drove up a lot of the breaches during the pandemic. Everybody was having home delivery, et cetera. So these emails have gotten better. They used to be really easy to pick out. You'd see the spelling errors and the rest of it, but the emails have gotten much, much better to work out. So now as you have employee training built in, it's important. So some folks use payroll services. You can embed the training into the payroll services. Every employee that comes to work for you, it should be part of the onboarding. These are just good things that you can have with your clients, depending upon their level of sophistication. There are third parties, and PIA probably provides some of this, where there's training, and it will deal with training around phishing, around ransomware. Phishing being the big one that I'm referring to right now, because phishing leads to the ransomware, right? Phishing leads to the breach. And so that's the type of training that would be really helpful to handle inside of your own organizations, but among your clients, because many of these breaches actually start from the inside, from a really good employee who is just working really fast and hard. And just about everybody knows at some point in time, they've clicked on an email and their heart goes, and then they go, oh, okay. The other ones that are real big are around the social engineering, they're now termed. But years ago, when we just wrote crime insurance before cyber, we would refer to them as some form of breach of fiduciary systems. So bank accounts and others. I often caution people about turning on their out of office replies. So there are phishing scenarios that are documented. By the way, there's data on everyone on this call right now. You need to know this. The bad guys know something about you. They know what you're doing, what you're thinking, how you're doing it, and they know it on the businesses. They know the leadership in the businesses. So if you've ever noticed a correlation between turning on your out of office reply and social engineering reach out, that's not a coincidence. So when you turn that on, don't turn it on from your phone. Make the point to turn it on through your Outlook client and do it only for your contacts. So that the bad guys who are sending you spam, you might go, this is the stupidest spam in the world. What are they doing? They're not so dumb. Remember, spammers are not dumb. This is very organized. It's considered a bloodless crime, and it's actually considered respectable in many countries. It is like going to work every day in a call center. So the spam that you see that's hitting you is sometimes testing to see if you're out of office. And if you are in fact out of office, your CFO or somebody working for you might get an email that says, hey, I'm out of the office right now, but I've got this emergency that's coming up. We just need $1,600 wire transferred to somebody. So what used to just be called wire transfer fraud has taken on a new meaning under social engineering. So I probably gave you, Mike, 4 or 5 scenarios that I think most people could share with their clients. There's more clearly, but I don't want to burn up all the time on those.
Aaron, what are some ways agents can set themselves apart?
It's the same thing we've talked about earlier in the call is get a little bit more educated, right? Pull some of these forms, look at some of these coverage definitions. Keith was talking about social engineering, ransomware. There's reverse social engineering is a hot topic as of late. Invoice manipulation is another good definition that I've seen out there in the marketplace. And these are some great coverages from different types of business, especially when it comes to real estate transactions, right? We're seeing, where's the breach? Well, there was an impersonation of somebody with the one letter reversed, and you're never going to notice it because you're reading your email on your phone 90% of the time, and you're just not going to pay attention to it, right? So the money is actually stolen from, and we've had this happen to a client of ours. The money was the purchaser of the real estate is the one that wired the money. It was never taken from the title agency or the law firm. It was gone right from the individual who doesn't have the cyber coverage in place to protect his loss, right? So created a huge mess of about a $60,000 claim, and I've seen that more than once. I think PIA has, in the resource center, Claire sent out, I'm looking at it right now in the document you sent out earlier. There's some great quick source documents to help agents. The data establishing a data retention policy is in there. Agency policy and procedure manual. All these things from the resource center are great.
Okay.
And who's talking? Sorry. and super helpful to us. I use a third party also that I share with a lot of my clients that has some workplace safety, cyber related policies and employee handbooks in it, which I share with a lot of my clients. So there's great resources abound, and starting with the quick source documents through PIA Northeast is a great way to go.
Keith, how do you help a client get through that tremendous application?
Good question.
So this is, Mike, I know this is a pet peeve of yours and mine, so I don't think it matters just about the cyber app. I think it talks about how you have a customer experience, but we'll break it down to executive lines like cyber D&O and other areas that are confusing. There's, along with that 5-question app, which frankly, I think is great for, for folks who may not know about cyber, and it might be great for the client. It's probably not really good to help you identify where the exposures are, right? That said, sending an email to your client and having them do all the work, whereas in the 90s, I joke, that when I first got involved with writing executive lines, there was a joke about, in order to have a D&O app completed, you would print it, take it off the printer with white gloves on, slip it into an envelope, don't lick it closed because that would be your DNA on it, right? And then send it to the client and then get it back completed and signed, and then move it directly in a hermetically sealed device to the carrier, right? And that would prove that you had absolutely nothing to do with anything on the application. And that's what sometimes the E&O carriers would tell you. We evolve forward. So if that philosophy is, well, I just emailed my client a link to have it do themselves, to have them do it themselves, or a PDF. Put yourself in the client's shoes for a moment. Is that the best experience? And so for those who have done that, they'll often tell you that they've received notes from clients that will say things like, can you help me with this? Or, hello, isn't that what I pay you for, advice? So what works for us and has become much more acceptable through the pandemic, so one of the positive sides is screen sharing. So I really encourage folks to use the products that are out there, to do screen sharing and set up an appointment with the client. And then this way, the client is looking at the application. They're seeing what you're seeing. You're working together, and they're actually answering questions ahead of you, which is fantastic. But they might say, what do they really mean by that? And now you get to be an insurance agent. That's what you're supposed to be doing, right? Helping to protect your client. The other nice part about it is you don't chase anybody for an application. When you get on that phone call, and when you get off that phone call, you're generally done 90% of the time, unless they don't have an answer to a question. And even then, you're down to a few. And the nice part is you are much better than the competitor who simply emailed them, a form or a link. And, I know that there's technology solutions out there offering this. They may not like hearing this, but the more complicated the risk, the more upset they're going to be when you send them a blank form to fill out, right? So that's what I find works. Mike, I think you do the same thing, just in a different line of business, right? In transportation. So you understand the value of collaboration versus just dumping it all on your client.
Aaron, how's the standalone policy compare with what's offered on a BOP?
I think we covered that, 9 different ways. Just like a lawyer questioning you in a deposition. But yeah, we've definitely sliced that apart. There's significant coverage differences even on the cyber between having first party, third party, or just data breach coverage, right? Just that first party response. Same thing on the EPL, right? What are you getting on a BOP if you have a little bit of EPL in there? You're getting maybe some discrimination, maybe some ADA coverage in there. You're not getting, all the lines of coverage that you want. And same thing on a professional liability, right? You write a BOP from any one of the nationals that includes professional, how many of us have actually read what's excluded on that professional piece? So standalone is obviously going to be best, but I always say something is better than nothing if you're forced back to putting it into the BOP and having a little bit of coverage for a little bit of money, as opposed to, forcing them to spend another 10% of revenue on cyber coverage. So I think that's the major difference, is we have to work with our clients with what they want, because at the end of the day, they're going to buy what they want to buy. And it's up to us to do a good job of, helping them buy the right stuff at the right price.
And not to be I'm not trying to be a negative Nelly when I say this, but the endorsements are also good for the carriers and in some cases good for the agency. So what it does is it provides definitions around an exposure where the policy forms might have been silent on previously. So now, just the same way we might have in a homeowner's policy, a limit around backup pursues and drains, whereas something might have been silent before, that provides for the ability for post-loss mitigation to be well-defined. It's no different than having special limits on jewelry on a homeowner's policy or sub-limit on valuable papers, right? It provides for there to be a framework and policy definition around something that was previously silent. So you might have a carrier that was writing a lot of, doctor's offices, accountants' offices, lawyers' offices, right? Mortgage brokers, insurance agents. And they said, oh, we have an exclusion on professional services, right? They didn't have an exclusion on cyber. So the policy forms were silent. So it's actually a good idea to try to put in something just about every time. So even if you write the standalone policy, it is still a good idea not to ignore that endorsement underneath the traditional property and casualty side of the house.
I know we talked a little bit about the trends for the current marketplace for cyber liability. And I know I've seen it. You're right. Some of the carriers that were providing coverage have exited. Some new ones come in, difference in coverages, difference in retentions. Anything else, Keith?
Those are the big ones. You're going to see sublimits get introduced into renewal policies or lower limits. We've had clients where you're going to see limits at 10 where they come back and say we can't do above 5. The excess marketplaces come out. Anyone who writes traditional executive lines like EPLI or D&O in particular, you've seen this over the years already. This is a process that goes on. There's a period of time with D&O where all of a sudden everybody has to write side A coverage standalone, and then market comes back and capacity grows and everybody's writing $5 and $10 million limits again. This is a natural evolution in cyber. We have to go through this process. It couldn't always keep going in one direction where we're writing more for less, which is what's been happening for a while. So I think that we'll see this for some period of time. It's a market correction in some cases, some folks might say. It's also a little bit of a house cleaning in some cases where, some carriers who may not have had the best forms or terms and conditions, or they weren't keeping up, have made a decision not to continue to go after a certain line of business. Even if they had good forms, they might have made that decision because they suffered intense losses. But then you do see new entrants into the marketplace right now where they have no legacy exposure. So they're starting with, fresh, T&C. They're going to come out with new sublimits on policies that will allow them to do it, new coverages that are more attractive. And so I think this is a natural order. Right now, it's painful because if you have clients who filled out the same application for 6 years and they reach into their drawer and go, oh, my renewal app, let's fill it out just as we did last year, you're going to get a surprise. So on that renewal app, that's the thing that I think stands out right now is make sure a client doesn't think, well, just because I filled it out this way last year, it's acceptable this year. That is not going to be the case.
Brad, let's change gears. Let's talk about EPL coverage and mandatory vaccinations.
That's a good one. So EPLI would come into effect with mandatory vaccinations when you're dealing with employees who might have a religious or a medical exemption for vaccine. So if an employer were to mandate vaccines for their employees, which they have full rights to do, again, the EPLI would kick in there. So you have an employee that's medical issue, religious, then EPLI kicks in on a discrimination charge if that employer was to require that person to get a vaccine or was to terminate them because they did not get the vaccine. So outside of that, probably not going to get much with the mandatory vaccine with that policy. I guess the key thing would be for employers to try to treat employees the same. If there's a legitimate exemption, you have to respect that. I should mention that a difference of opinion is not legitimate. So if an employee doesn't want to get the vaccine because they just don't want to, that's not a legitimate reason. They can be disciplined, terminated, whatever it might be. That would not be considered a discrimination or wrongful termination. It would really only be under those exemptions that I mentioned.
What about testing mandates?
Yeah, so that's a good one. So, the key there with testing is to treat everybody equally. Employees could mandate testing. There's also mandates that come from other entities, right? Carriers might require something. The key is, again, not to discriminate. If an employee has a legitimate objection, then that needs to be dealt with. But if there's no objection, then that employee needs to be dealt with the same way anybody else is. This is a sensitive area for a lot of people, the vaccine and things like that. But at the end of the day, an employer has a responsibility to their employees to have a safe and healthy workplace. If you have employees that are actively sabotaging that, if you will, then that needs to be addressed, because if it's not, then you've got a whole other bigger issue with other employees if there's a outbreak or things like that. So that's, it's a complicated issue, but yeah.
How does a potential positive COVID test create a risk for the client?
So first of all, employees don't have any obligation to report to their employer whether they have a positive test or not. What I would encourage all employers to do is make sure that you have some way for employees to notify you of a positive COVID test or any sort of, I guess, infectious disease illness in a confidential, anonymous way. Once an employer knows of a positive test or something that could impact the health of their employees, they have a responsibility to then inform their employees. Now, that's where you get the sticky situation, things like HIPAA and that sort of thing. As a general rule, employers should try to leave as many details out as possible, right? So you don't want to have names and specifics like that. You can specifically say, an employee has notified me that they've tested positive for COVID. Here are the actions that we're going to take. I would not include any more information than that. If you do, that's when you get into issues. That goes back to what I mentioned about having an anonymous system. If you don't have the name, it's not going to get released. So hopefully having an anonymous system encourages people to, one, report, and then two, makes it easier to get that information out to employees without compromising confidentiality and other things like that.
Aaron, despite all these covered risks under the EPL, it's become more difficult to sell to our customers EPL coverage. Want to expand on that? Other than cost and retention?
We've had a lot of claims in the past couple of years. Pre-COVID claims were up. During COVID, early COVID, there was all the whistleblower claims of "you made me go to work," and I was afraid to go to work. And so, claims are still hot around the COVID related workplace relationship issue. Discrimination, harassment claims are up as well. So again, just like cyber, the market is shifting and responding to the amount of claims that are coming in and why the claims are coming, what the claims are coming in for. So we're seeing, clients, customers, insureds that have had policies in place are maintaining their lower retentions. We're seeing renewals kind of flat on the retention basis, but anybody that wants to get in new, we're seeing some pretty high retentions on there. I think, and I don't speak for the companies that are offering this, but in most cases, we're doing a lot on the ENS side with some specialty carriers that are, in this space, but some of the claims are $25,000, $30,000. They're pushing a lot of that onto the insureds and saving the limit on the back end, right? So we're saving, the retention is going to be a little bit higher. It's helping keep the costs reasonable, but we should probably continue to see this trend for the next period of time, and then hopefully we can regulate. But the application on the EPL, just like cyber, is starting to change, right? They want to know, do you have your employee handbook in place? When was the last time it was updated? What are your policies and procedures around termination, COVID, employment, harassment, discrimination, and everything else in between, to make sure that these things are in place and signed off on by the employees. So, it all works together, and, putting it in with cyber and management liability, it creates a good package for us as agents to be able to present things in a way where it's protecting the insured as opposed to just selling product, I think is super important. So we're presenting EPL as much as we possibly can, and people are, scoffing at it and upset at the retentions that are in there, but we're putting it out there and getting people to still cover their butts.
One thing I wanted to mention, I just made me think of this, Aaron, legalized cannabis is going to impact EPLI as well. We've got New York, New Jersey, Connecticut should be legalizing soon. Those laws have certain protections in place for recreational use of cannabis and certainly for medical. So if an employer has drug tests or drug policy that counters state law, get ready for the lawsuit. So EPLI is going to be really important in that arena as well.
Awesome.
Keith, the collapse of the condo building in Surfside, among other recent events, has spiked interest in directors and officers liability and other management policies. What are you seeing in that part of the marketplace?
Mike, before I go on with that, I just want to add something to the EPLI conversation, if I could.
Yeah.
So the reduction in workforce that's occurred has also had a major impact on the carrier's approach to this, as well as the financials, and that'll transfer into the D&O here. So when you have everyone's financials getting impacted, it does have a direct correlation to the application process or the renewal application process. So it requires folks to become a little bit more educated and eloquent on presenting their client's situation to the marketplace. D&O was already evolving depending upon whether it was, for-profit, not-for-profit, public entity. So depending upon what vertical you were in within that line of business, you may have already been seeing some market tightening. Then you add in the pandemic and the change in financials, the reduction in workforce, and it has made the D&O underwriting, a wee bit more difficult. I had clients who moved from, $5,000 or $10,000 in premium to 30. So we saw some substantial increases. By the way, we saw the same thing in cyber, but the conversation around the D&O exposure, for those who don't currently have the coverage, is almost like EPLI. So what a lot of folks found was that if you did not currently have a line of business as part of your schedule of insurance, trying to add that line of business to the schedule of insurance, for as much as we would like to be able to account round and provide clients with enough coverage, the first piece is if someone doesn't have D&O, if they didn't have EPLI, the market availability, when you don't currently have it, had tightened substantially. In some cases, it's loosening a little bit now, but around EPLI, but still, that was a marketplace change. If you currently have it, just like I said on the cyber, pay close attention to that renewal application, because the underwriter it used to be rubber stamped in some cases when the market's great and let's buy up as much as we can, but that's not necessarily the case right now. So everyone's looking a lot closer because they don't want to be the underwriter who now gets hit with that renewal policy. Now, I've had some that have gone through absolutely perfectly fine, no increases, it's been great, but typically those are the ones who had very little impact from a financial standpoint for whatever reason. Those clients who maybe had 100 employees and now they had 23, and they had, X amount in revenue and now it's down 60 or 70%, be prepared on the renewal process to do a lot of splaining, right? And hopefully you've got good relationships with your underwriters to do that. If you're working with an intermediary, hopefully the intermediary has good relationships with the underwriters to explain that. Because in some cases, the intermediary you're working with, who might be an expert in this area, might know more about this line of business than you might know. So, choosing who you work with has a big impact on your success in executive lines as well. The small piece on the MPL side, if you're packaging it together as management professional liability suit, you put in the D&O, the EPLI, et cetera, together. Sometimes those simplified applications don't tell the full tale. And so be prepared for questions to come back, even on small businesses and even on renewals.
What are some exclusions that agents should be cautious of in management liability policies?
Well, it's exclusions and sublimits. So what you're seeing is new sublimits introduced in some of these areas. you could have it around, ADA compliance, you could have it around a variety of other things. I mean, Brad might have some information to add to this as well. I want to be really careful, again, related to some of the antitrust statements that are here. But so here's the tip I give to people. When you get the renewal indication in, ask the question, right? What has changed in this? And when you see changes in terms and conditions come across, you'll be able to see on a client by client basis, what, if anything, may have changed related to the terms and conditions on the renewals. That's a step that you probably should do anyway. Sadly, what I have seen in every agency sometimes is that when the renewal comes in, you're so thrilled to have that renewal indication, particularly if the market is tight and the client's waiting on it, that you're super excited to get it over. Be careful. I mean, it is what it is. And you're better off explaining to a client that, guess what, like with cyber, you had $1 million in coverage. Now you have a $250,000 ransomware thing. We've gone back to the company and we're able to get another indication for 500. So which one would you prefer? Versus, here's your renewal, it came in great, have a nice day. Okay, which is not the case, because that will lead to problems after a claim. So I think the agencies from an E&O standpoint really do need to ask that question on the renewal process.
I want to go to the topic of ADA website compliance. I know we've heard some scenarios that have been pretty far-fetched. What coverage is available for ADA website compliance?
Great question, Mike. ADA website compliance is becoming a big issue. For those who aren't aware, the Americans with Disabilities Act requires all businesses to make reasonable accommodations for their customers. There's been a couple of court cases that have extended that out to websites, so that websites have to be navigable by those who have hearing impairments, might be visually impaired, things like that. I've actually got a call from more than one New Jersey member who have gotten letters from attorneys alleging ADA compliance issues. So it is a real issue, and New Jersey insurance producers are being targeted right now. So going to your question of insurance options, because we're dealing with computers, people generally think of cyber liability, but it's actually not. It's going to be your EPLI policy, because you're dealing with discrimination. Just like I guess I'll say regular ADA claim, where let's say you don't have a ramp going into your store or the bathrooms aren't compliant. That's EPLI. This is the same thing. Just because we're dealing with a website doesn't change the policy. So if you have that EPLI, you should have coverage here, third party. I want to make sure that I emphasize that. Now, one trick here with EPLI and ADA is sometimes the cost of compliance is not covered. So the cost to put in that ramp or change the bathroom, or in this case, to update your website. So be aware of that. I know there are some policies that you can buy that option on, I guess endorse that coverage on, so they'll cover costs for compliance, but that's not always the case. So just a FYI on that.
So from a practical standpoint, I just clicked open my website on another screen real quick, and I have a widget on my site that has all the accessibility adjustments possible, from font, audio, so on and so forth, across the board. I think we paid $100 for this widget, and it's right through the WordPress platform. And I have, somebody that handles the back end for me. So I don't know it's probably like the click of a button to add this to anybody's website. It's super simple and easy. So, if you have somebody managing your site, just get this added on, and then you'll avoid getting that nastygram that's been going around. And insurance agents have been a huge target for that nastygram, because we're pretty easy and out there. So get the widget put onto your website if you have a website, and it's a lot cheaper to just do it now than worry about it later.
Aaron, that's a great point, because not only do you have the compliance aspect to worry about, right? But those are potential clients, right? I looked at a stat. I'm sorry, I'm fuzzy on it. It was those with disabilities have about $60 billion worth of purchasing power in the United States, if I remember correctly. It's a huge number. So just adding those widgets for that low cost, that could increase your bottom line if you can attract those clients that other people cannot. That's a competitive advantage on top of just being something that you should be doing. All right.
Sounds like I have to write a blog post about that.
Before we conclude, any final tips for agents on how to at least try to convince clients to purchase some of these policies and additional coverages?
I mean, I think, listen, we have to be honest, because we're doing the same things for ourselves that we want our clients to do, right? I think that's the message to get out there. It's we're protecting your data. We're protecting everyone else's data. We're doing what we can to continue to better our business and also spending our own money on our own insurance policies for the same exact reason we're asking you to, to spend more money on insurance policies. It's not because we're, being greedy, but laying the costs out there, using the math, as Brad and Keith pointed out. And it's, super, just continue to get it out there and be familiar, try to get familiar with these applications. So when you ask a question, you know what you're asking, I think is important. When you ask a question, you don't know what you're asking just because it's on a piece of paper. We're not the expert at that point. So figure out how to become an expert in the apps that you're collaborating and sending out as well.
Thank you. Claire, I think we had a couple of questions that came in. I'm on a smaller laptop, so I can't see them. And I don't know if we have time to answer any of them. You see any that we want to do?
Just if one of you really quickly wants to discuss business interruption loss and cyber coverage. I know that's somewhat covered. Just tie the conversation up in a neat bow.
Sure, I'll take that one because I did touch on it before. Similar to the way in which we handle a property loss, business interruption, which often will have maybe a main coverage and then a sublimit to it, potentially, particularly in some of today's indications that are coming out, is managed in a way that would be similar to most property claims related to those coverages or those expenses that would have been both directly related to the loss and those expenses which are incurred, which were adjunct to the loss or effectively, extended only as a result of the loss. So an example would be, and I used it before, client has a potential breach. We believe somebody's clicked on a ransomware. What starts to happen? You get the phone call, you report it to the carrier. Now the clock starts ticking. Is there a waiting period or not? Similar to a traditional business interruption loss. And that's why I'm trying to tie this to what people already know with property versus what you would say to a client. Is there a series of steps that you need to follow underneath the policy, terms and conditions? Yes. There's usually a reporting process. There'll be attorneys that will be brought into the conversation at that point in time. Confidentiality kicks in heavily because we do not want this leaked out. We need to make sure we have control of the conversation related to your staff, so that when your staff shows up to work the next day and is spinning their chair because they were told not to log into their computer, what starts to happen is the payroll ticking at that point. Yes, it is. Do we want them talking to people? No, we don't, because you haven't controlled the message yet. This is all part of the expense, right? Of the claim expense, the business interruption loss related to payroll, potentially the equipment, and related to not being able to move product. So let's think in terms, there was a pipeline that was breached, right? There's no product that's moving. So not only do you have the payroll that's sitting there, you also have the fact that you're not selling product during that period of time. We're in the middle of a pandemic. If you have a loss and someone now no longer can receive, there's no transportation coming in, you've lost all your logistics around this, depending upon the nature of the business, those could be impacted as well. There may be a window. Maybe you could only get that product delivered to you on the most recent thing, and now you can't get that product. Mike could talk. He's in logistics and transportation. He could tell you story after story. Cyber losses are tied into everything that happens in the business. So the business interruption coverage is vital. I've had losses where the business interruption was the loss. I mean, the notification was almost meaningless because we realized that nothing major happened. We were able to prove that out with forensics, but it might have taken 3 weeks to do that. And during that period of time, somebody's running around to stores trying to buy up every laptop and computer they possibly can, just so the accounting department can get back online. Who is mission critical? I might have 20 people in accounting, but we can get going with 3, right? The old days of sharing a screen. The same might happen with, folks who are in the field working. Now they're in vehicles. Oh, by the way, we don't have that anymore. So you figure it out, and all of that becomes extra expense. So the primary business interruption, the extra expense is very similar to a property loss, but there are a lot of nuances to it that, would help. So I don't know if I've answered the question. I almost have to say, show me the claim and I'll tell you how that will work. And there are people who handle these claims much deeper than I do. And here's another thing to the agent. If this occurs, you are not considered part of the confidential group in most cases. Your client has to opt you in if that's allowed to happen. So yeah, a client might say, just sit in the conference room while on the conference call. But, typically you're not considered part of that confidential group. Whereas it's very different than a property loss where you know everything that's going on every step along the way.
Okay, thank you. Thank you to all the panelists, and thank you to everyone who's watched our deep dive program today. And please be on the lookout for another deep dive somewhere in the future.
Thanks, Mike. for
Thank
hosting.
you, everybody.
Claire.
Appreciate it.
Thanks to PIA for hosting this.
Thank you. Bye.